So I had a couple of requests come in over the weekend and week last week. Just looking, people looking for some extra help with the overnight trading strategy. It's been a few weeks since we've done a specific call on the overnight trading. So there's been a lot of popularity with the strategy. So I wanted to make sure that we go over the rules and how it works, the risks involved with it. There's actually a few different versions of the overnight trading strategy that you can trade. So I want to make sure that we cover those different versions and that you guys know how to execute correctly. I'd like to also give you guys an opportunity to ask a lot of questions. So as we go along, feel free to ask those questions that you have in the chat box. We'll do that. I also want to show you guys how to do this. There's been several requests on how to trade this during the Tokyo session and the London session. So, love to show you how to do that. We're going to have other webinars that we do that go over those details as well. Um, just because I think it's good to have a couple of different options. This can be done at the breakout of London. It can be done at the breakout of Tokyo. It can be done at the breakout of New York. It's just a little bit different on how that's going to be done. Um, so. Um, but yeah, let's jump into it. Before we get started, as always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go over the overnight trading strategy. So it's a pretty simple approach. Basically, what you're doing is you're trading, and you can trade really anything you want, but I prefer the euro dollar. The reason why I trade the euro dollar with this overnight trading strategy is because the euro dollar um, is like the most popular currency pair in Forex. And um, it's also the currency pair that has pretty smooth breakouts with low spread, generally speaking, across most brokers. Um, the euro dollar is gonna the reason why we trade this strategy, the whole edge behind it is the fact that during the Sydney session, the market's really quiet and doesn't move a lot. But then during the London session, you get a lot of movement. Okay, so the London market breaks out pretty significantly and this is happening while we're asleep here in the United States. So the London market opens at 3 a.m. Eastern. If you live on the Pacific, it's at 12, so it's at midnight. So it's pretty late, and that's when a lot of the activity in Forex takes place. In fact, 73% of all foreign exchange transactions take place during the London session. So unless you have a way to create income through the London session, you're missing out on a lot of action. So that's why I love this little strategy that we've put together because you're able to take advantage of that huge breakout that typically comes to the London session. So what we do, and this is the idea, is you're basically trying to isolate the um, let's go ahead and pull up sessions here. So this is an indicator free on TradingView. So on TradingView, I'm using this thing called sessions, and I believe it's by a creator called Orox, I believe is the name. Um, and then I just switch on the Sydney session. So I'm going to only do that, and it's going to highlight in blue here. It's very light blue. It's hard to see actually, but it's going to highlight in light blue here the Sydney session. By the way, I usually do this on a 15-minute time frame. So this euro dollar, you can see it's 15-minute chart. It's basically what I'm doing is I'm isolating the Sydney session each day. And so I'm going to go ahead and actually draw a box. What I do is I take the high of Sydney right here. So this is yesterday. And then this is the low of Sydney right here. And then I'm going to here, in fact, let me actually make this so that the rectangle is actually just there we go. I didn't want it to extend to the right. All right, so that's the Sydney box right there. And then if I go over here, this would be the Sydney box. You're basically locating the top of the Sydney box right there. And then you're taking the bottom, which would be right here. Okay. And then that's the end of the box, right? And then you're doing that again over here. This is a few nights ago. right here. And then a few nights ago, this is the box right here. So every night this is going to change. Sometimes your box is going to be a little bit wider, and sometimes your box is not going to be that wide. Um, here's another box over here. Okay. And the idea here is that again, during Sydney, during inside these boxes, generally the market's not moving that much. There are a few exceptions, like last night there was a little more activity during the Sydney session on the euro. The night before, a little bit more. Previous night before that, not a lot right here, not a lot right here, not a lot right here. And those are usually, I've kind of noticed the nights where it actually consolidates and moves. The nights where it's like the quietest, it seems like those tend to be a little bit better, I've noticed. Um, this was a pretty good win right here I woke up on the 17th to a really big win this day right here. This was really good. The market broke out really nicely outside this box. I did notice a few people said they got triggered into this trade a little early and they ended up losing on this. And I think a couple of reasons for that. I think it was more spread related than anything else. I think what happened was, if you set your trade up before Sydney had closed, there was a moment where the market came pretty close to the high of the Sydney box here. And if your broker triggered you into that buy right there, you would have actually prematurely gotten into your buy before it actually took off in that breakout direction. So that kind of stinks when that happens. There's not a lot you can do. I do have a suggestion though, when that happens, by the way. So if you ever get triggered if you're noticing that you're getting triggered into some of these breakouts a little too early, you got a couple of options. One, you could switch brokers and see if a different broker um, doesn't execute you into trades too early. I think that's not super easy to do, and probably not something that I'd recommend to everybody. Plus, you don't know if the other broker is going to be better. So something that you can do yourself is, I think it's actually a smart idea to maybe put your trade a pip or two off of the high rather than putting your trade right up against the high. I think it's not necessarily a bad idea to maybe place your trade a pip or two off of that. That way, if the spread comes up and tries to tag you into the trade, you miss it by a few pips or a pip or two. That should help a lot of folks. That's a good way to. I think that's a good solution to that issue right there. It doesn't happen all the time, but it happens frequent enough that it is an issue. So I think I think that's a good solution to it. But basically, this is the idea. So you're looking for days like this. Okay. So we just need one day out of 6 days, you know, one day a week. Basically is the idea. One day a week, you need the market to break out pretty smoothly like this. And what we're doing with this is we're placing a pretty big trade. The idea is that you're placing a buy at the top of the Sydney session, and then you're putting a stop loss midway through the Sydney session. So if this is your Sydney box right here, your stop loss is going to go halfway through, and then your take profit is going to go 5 times the stop loss. So you have to place your stop loss first. This is important. A lot of people try to place their take profit first, but you're going to find out pretty quick that it's very hard to do. You're not going to be able to place your take profit because you don't have a reference point on to where to put your take profit. So you have to place your stop loss first to know how big of a target you can you can get, right? So the a couple ways you can do this, you can just draw out these projections on TradingView. Another way to do this is just to measure how big this box is. So if you measure from the top of the box to the bottom of the box, that's 12 pips. So half of 12 is 6. Okay. So that's going to be your stop loss on both trades is 6 pips. All right. So just plain and simply, that's it. Just however big that box is, you're going to take half the size of that box, and that will be your stop loss in pips. And then 5 times your stop loss is your take profit. So that's a 1 to 5 RR ratio. So you're trying to make 5 times what you're risking on the trade. And if the trade wins, like I said, you'll make 5 times if it's like if your risk doesn't change, you're just making 5 times what you're risking.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So yeah, you got to place your stop loss first, because if you don't place your stop loss first, then you won't know how big of a target you need. Like I said, a lot of people try to place that take profit and they're like, how far should I put it? Should it go here? Should it go here? Should it go here? Well, it's like you got to figure out what your stop loss is, because there's no reference as to where you could put your target. And then you can go ahead and place your um, if you put your short position in, you're going to put a short at the bottom of the box. I think I actually got triggered into this short. Yeah, I did. I got triggered into this short first, and I ended up losing this particular trade. Um, but yeah, see what I did? I placed my stop loss first. Then I can go ahead and move this target to 1 to 5. So I like to do the projections. The projections make it pretty easy to be able to set this up. Um, and then I go ahead and place my, from here, now when I go take the trade, I have reference points. I can be like, okay, right here, that's my take profit of my buy. Here's my take profit of my sell, right? Here is my um that's my stop loss for both trades. Yeah, it's the same price. And my take pro or let's see, my entry for my sell is right here at this number. My entry for my buy is this number. Okay, so that's why I like to do the projections first. Makes it a whole heck of a ton easier if you do this. But it all starts by drawing an accurate Sydney box. So if you don't draw out your Sydney box, you're going to have a really tough time trying to place these trades. So I highly suggest that you do, in fact, go out there, draw out your box, and then go ahead and put these projections up. And then you're actually good to take the trade from there. The only other suggestion I would give is if your broker is giving you problems with triggering into trades prematurely, then I would suggest that you go ahead and move that entry a few pips off, 1 or 2 pips off. So how would that be done? Basically, what you do is you just drag this entry up just barely, like a pip off type of thing. The very top of Sydney. This is not a bad practice, actually. Just go ahead and do that, just barely off Sydney. You might have to adjust these targets just a little bit. Like right here now, my 1 to 5 is like right there instead to adjust, because basically making your entry a little bit wider. So you might have to adjust these exits just a tiny bit, but that's not a huge deal. So and then you'd be set. You'd be ready to go for the night. Okay. Um, yeah, so that's basically the overnight. That's the overnight setup. Now, here's where we really make the profits really run. Um, Here's where things get really fun and exciting. So this alone is pretty cool because if the market does break out, you're going to make 5 times what you're risking, which is awesome. Um, Not every night the market's going to break out easily like that. In fact, I'm only expecting that to happen 1 or 2 times a week. So if you're feeling like, so a lot of people try this strategy out and they're like, Steve, I've lost like 3 nights in a row or 4 nights in a row. What 4 nights in a row is a lot, but it's happened. There's been plenty. I'll show you the sequence calculator in just a moment. And my journal, there's been plenty of nights where that's happened. I've even gone the full 6 nights before I've gotten a win so far. Um, but yeah, so this has a low win rate because you're going for 5 times what you're risking here. So I'm winning about 27 or 28% of the time over the last, I don't know how many trades, but it's been since May. I don't know how many trades have been taken since May, but it's a 27 or 28% win rate. I've also noticed over time, everybody else usually winds up there. A few people who have tried the strategy recently, they're telling me that they're getting like a 38% win rate, which is higher than mine. My guess is over time, their win rate will probably equate to mine pretty soon. Yeah, so it's a pretty low win rate. You're not going to win all too often. So if you're looking for a strategy that wins 90% of the time or 80% of the time, this is definitely not your strategy. You're not going to enjoy that because it's a system that doesn't win that often. However, just because you don't win that often does not equate to being unprofitable. See, a lot of people think that your win rate is everything, and that determines your profitability. But there are many other variables involved. The big variable, the elephant in the room variable, is your average win to average loss. So it's not just about it's like saying okay, like you go up to bat, you're playing baseball, and if you hit singles every single time, that's great. You're probably a pretty valuable player just because you're able to hit singles so often. But that guy that's able to hit a home run every other or every 3 times he goes up to bat, that guy's going to be the hero. He's the VIP in the room because he's hitting home runs every third time he goes up to bat. And even if he strikes out, every couple of times, that's okay because home runs are a big deal. So I do think it's important to hit singles and doubles. Everybody knows that it's important to do that kind of thing. Um, but I've also seen the value with this style where you hit home runs. Because if you can keep your risk down and hit home runs 27% of the time, um, it can be very, very valuable. And you'll see those numbers here if you're not familiar with this yet. Um, so the way I look at this is I'm totally okay with just winning 27% of the time. I'm perfectly happy with that. It's funny. There's this guy who reached out to me last week. He's like, I'm really interested in your overnight strategy. What's the win rate? And I'm like, only 27%. And he's like, what? Why would anybody want to do that? I'm like, that's fine. You don't have to do it. Like, it's like, but no, I didn't share all the whole story. Like there's definitely more to the story. So let's get to that part of the story here, right? So what's making this really awesome each night is our sequence calculator. So um, so basically, what we're doing is this is, I wouldn't necessarily call this a martingale. This is not like a true version of martingale, but it is a form of, I guess you could call it like a form of martingale. Basically, what we're doing with this is we're amplifying the profits as we get closer and closer to a winner, right? So we, since we're winning 27 or 28% of the trades, about 1 in 3 or 1 in 4 trades that we take actually win. So basically, what we're trying to do is nail the winner. We're absolutely trying to totally nail the winner with this style of trading. So basically, what I do is I start with a default contract size and I do 0.25% risk. So I use a lot size calculator when I go to set these trades up each night. And 0.25% is what I'm putting in the calculator. If that trade loses the next night, I set up the exact same Sydney box breakout trade again. And then I use the 0.38% as my risk in the multiplier. If that trade loses, I go to 0.1, 0.57. So I'm using this, what we call the 1.5x multiplier. And this gives you up to 6 days. So you could lose for 6 days in a row. Well, up to 6 days. You need to get a win by day six. If you don't hit a win on day six, we call that bust. And bust is where you don't get a win in the sequence. And basically, what happens there is that you just call it a sunk cost and you have to restart the sequence all over again. This has not happened to me yet. However, I am fully expecting it to happen at some point. So if you're somebody who's out there trading the 1.5 multiplier and you're thinking, hey, I'll never hit the 1.5x, Steve hasn't had that happen yet, probably won't happen to me. I'm just telling you right now, you're wrong. It will happen to you eventually. You will hit bust. I'm fully expecting to hit bust at some point, and I'm perfectly okay with that. And part of it's because I've actually put this together over here. This is my bust calculator. I want to get to my bust calculator and just I'm going to show you the bust calculator in just a moment. I'm not quite ready to get to that, but like some people might find it surprising that I'm fully expecting that. For me, the way I look at it is um, for me the way I look at this is I'm okay hitting bust because I know that well, and I haven't hit it yet because since May 1st, this account is up 27%, 28%. And so if I hit bust, I would probably pull back anywhere between 6% and up to 10% is what I'd give back to the market. And then I would just restart the sequence again. So, yes, I would give back quite a bit of money back to the market, but it wouldn't be full amount that I've made. In fact, I'd keep still most of the money that I've made over the last 2.5 months, almost 3 months trading this. So I'm totally okay with hitting that. Now, if you're somebody who doesn't want to hit the bust at all, I think you have a much better chance of never hitting it. I'm not saying that you won't, but if you use the 1.25 multiplier, you have an extra 4 days. So you have up to 10 days to get a win before you would hit bust over here, which is a lot more. You get a lot more days doing that. You will make less money, in my opinion. You'll hit bust. I don't know exactly when because I haven't had it even happen yet, even on the 1.5 multiplier. But so it's even less likely to happen on the 1.25 multiplier. Um, so my guess is it wouldn't happen for a very, very, very long time. That's my guess. Best calculated answer would be it probably wouldn't happen for a long, long time. And so you could get a win within that time frame of 10 days. Most days you'd probably get a win within day three or day four, just like we're already doing. Um, and yeah, you'll make based off of what I have found, you'll make about 40% of the 1.5 multiplier is probably what you'll make. So if you're making 10% a month with the 1.5 multiplier, assuming you don't hit bust, then you'll make about a 10% gain. And then with the 1.25 multiplier, you'd probably make closer to 4%. But it'd be a lot more conservative. So it's kind of up to you which one you choose to use. Um, yeah. Anyway, we'll get into that a little bit later. I do not recommend that you use the 2x multiplier. That is pure martingale at its finest, and or it's I don't know if you call it finest. It's pure martingale at its worst. So it's a lot of risk. You start at the 0.25, then just double each day, and you only get 4 days before you'd have to get a win in 4 days, and that's really difficult to do. You will hit bust often, probably once a month. At least once a month you'll hit bust with the 2x multiplier. Um, and you might make quite a bit um, when you're not hitting bust, but the few times that you do hit it, it could be a lot of money to lose. So I just don't think that that's a good route to go down, even though it might work for a time. You might have some success with it. It'll be very short-lived, is what I've seen. Okay, so that's why I don't do the 2x. But I have it there just to show you what it would look like. It's just there for demonstration. All right, so this is what amplifies this because if you look at the record here, so this is my journal record. The last 3 nights have unfortunately lost, but these have been the losses. I actually haven't lost both directions in the last 3 days. I've only lost one way. So last night I lost a sell at 0.57%. So I'm on the third day of the sequence. And then I lost, just as a disclaimer though, these two trades were hypotheticals. Because I was out camping the last 2 days of the week. So I went and drew those up, and sure enough, those two trades would have lost. Um, Kind of counting my lucky stars, I didn't trade that, but I'm still following the sequence nonetheless, just because I want to um, just continue with it. So yeah, I'm on. So tonight I'm going to go to the fourth day in the sequence, which is a 0.86% risk. I did win on that day on Wednesday morning that I was telling you guys about a 0.38%. I did lose the first direction and then I won the other direction. Um, um, oh, cool. So Paul says your hypothetical trades mirror my actual trades. Okay, very good. That's good. That's good. Yeah, that's kind of what I thought it would be. Good. Very, very good. Last night I did take the real trade though. This was real. And I did lose the 0.57. I just figured I'd pick up on the sequence because I'm assuming that I'm within a couple of days of hitting a big win here. Could be tonight, could be tomorrow, could be the next night. So I'm just gonna keep going with the normal sequence. Um, and then, yeah, I got a win here. I did win on the first day of the week last week. This was Sunday night going into Monday. It wasn't a full win, like it wasn't a full 1 to 5. I did close it in the morning and got about 17 pips of profit. And it ended up making about $708 at the default contract. So obviously the next night, Monday, I went to 0.25 because what you do is after you get a win, you just go back to the default contract. And then I lost both directions that day. And then the next day I won. I lost one way, but then won the other. And then that's where I'm at. So that was my last win was Wednesday morning last week. And here we are Monday. So again, um, you're gonna have lots of losses in between trades. Yeah, just so you know, it's not gonna be a perfect, it's not gonna be a perfect picture of wins. Now, let me show you this. Let's say we win tonight. Let's say we have a trade that we have a 10 pip stop loss, and let's say the trade wins 50 pips. Look at this. So if you win tonight, this is what the hypothetical would be. Let's do a calculator here. Let's grab a calculator. So if you take the last 3 days of losses, that's minus 250 the first day, minus 380 the next day, minus 570 the next day, and then a plus 4,300 if tonight wins. So you can see how big the winners are, right? When you win, they're kind of colossal because you have two things working in your favor. One, you have the fact that the winners demand a 1 to 5 RR ratio, period. Two, you have the multiplier effect here in play. So you're not only winning 1 to 5, but you're winning 1 to 5 with the biggest lot size in the entire sequence, right? And so when you have those two things working for you, like that's what makes the win just so colossal, right? Right. Okay. So I think that's good enough here. One more thing before I go to the sequence multiplier. What are the hypotheticals or what are the things that could happen? So here's what the expectation should be. When you set this up each day, the Sydney box, expect 1 to 2 nights a week that you win. Okay. So 1 to 2 nights. I would expect one night at least of a full 1 to 5 win. Okay. That's probably what you should see once a week. Okay. So you're basically hunting for just one of these a week, and that will feed you, that will provide what you need. Okay. To grow your account. That's all you need. Um, you might get another win. Like last week was pretty much what you would expect each week. One full win. We did have one day of a partial win. Okay. And it didn't go full 1 to 5. So that's kind of average. You'll also expect 1 to 2 days a week where um, you'll have like one trade lose, but then you'll wake up and another trade hasn't triggered. That was last night, actually. Last night, I got triggered into a sell right here at the bottom of the Sydney box. It triggered and then it went against us, hit the stop loss, and then it went back down again. It basically did nothing. The euro did nothing today. It started and ended where it began. Um, and I just lost. And then, so when I woke up, I had lost on my sell, but then my buy stop had not triggered. What you do in that situation is you just wake up, you close the buy stop that didn't trigger, and you go to your journal and you put in whatever happened. And then you get ready you get a journal entry ready for the next day. That's what you do. Okay. And then you're done. You just got to make sure that you come back, the next night to set it up to do this. Okay. So 1 to 2 nights a week, expect that. And then another 1 to 2 nights a week, expect to lose both directions. Okay. So this is pretty common. You'll have trade that basically, whips into the sell, and then it loses and comes up. The buy will trigger, and the buy will whip down and lose that way too. So about 1 to 2 nights a week, expect to get insulted by the market by losing both directions. It's very insulting, just so you know. Like if you haven't experienced it yet, it will ruin your morning if you're not careful. So you have to be like super not emotional about this. Like it has to be, you have to be like just totally unaffected by the result. You just got to be like kind of like a robot with it almost. Yeah, just it doesn't matter because you just believe in what you're doing. Um, so like it's just something you have to learn over time because if you're emotionally tied to the success of it, working out that day, then you're gonna feel emotions that you don't want to feel, and it has the potential to affect you in other parts of your life, which you don't want to have happen. So I've been on that many times. I've seen it happen. I watch it happen. Because we got traders who are well down the line to profitability and traders who are brand new. So I have to kind of coach that. You kind of have to develop. It's almost like a mindset you have to develop to be disaffected by the uh, the result, right? Now, I will say it's still really fun when you wake up and, like you have four different accounts trading the same strategy and like, each account's up $3,000 or 4,000, whatever that number is. Like it's exciting. Um, those are fun mornings, and yeah, I definitely post about it and get excited. And yeah, I would say I'm a little more chipper on those days, but I'm trying to actually tune that down still. Like I basically don't want it. My first mentor, what he said is, um, you got to be to the point where, you got to get yourself to the point where your spouse would never know if you made 20,000 in a day or lost 20,000 a day. You basically have to get to that point, where it's just a business as usual. Um, and then once you get to that point, then it's a lot easier to scale from there because it really doesn't matter what the result was because it's a process that you're subscribed to and dialed into. All right, guys. So we got to move on from here. The next thing I'll show you before we, um, because I have a few other things we got to do today. I got to show you how to trade Tokyo session, and I got to show you how to trade the New York and what pairs to use and kind of the rules. This is the first time we've ever introduced it, so um, I'm sure things will change, but we got to get to that. We have some time still to do that. And then the last thing I wanted to do while we're on The last thing I wanted to do while we're on uh, the overnight strategy is two things. One, I wanted to just also for those of you that can't stay up till Sydney close, that doesn't mean you can't trade this. Okay. Because I recognize that most folks don't live in my time zone. You know, you probably live more out east from me. And so, you know, things are late. You go to bed earlier than I do. And so, what time can you do this? It's just whatever time you can do this. So, you still draw your box out like normal. Um, One of the things that I've noticed that happens with folks kind of that have to go to bed earlier is you might have to force your box to be at least 12 pips. So, if you ever have a euro dollar that has a Sydney box that's smaller than 10 or 12, force it to at least 12. Okay, so just draw your box out, maybe extend your box, and so it's at least 12 pips. So your gap from the, you know, the middle of the Sydney session is at least, you know, 6 pips in each direction. That's the radius, right? So full diameter of 12 pips is your box. So long as you do that, you'll be okay. Um, and it's also possible that when you go to bed, you know the Sydney box is already like 18 pips. Well, perfect. Go ahead and do that. Um, Another thing too is a lot of people have asked me what do you do like when the market's already at the Sydney low, like or the Sydney top, the Sydney high when you go to set up the trade. Just go ahead and take the rather than doing a market order entry, just move your I would still move your sell stop and buy stop a few pips off of the current market price. That way you don't get entered into right away. You still use a buy stop or a sell stop. That doesn't happen as often, but it has happened many times. I've also noticed it happens a little more often with those that have to go to bed earlier. So there's just a little tip there that maybe that'll help you guys when you go to take these trades. The last thing I wanted to show you before we move along here is the bust calculator. So I was mentioning earlier that I'm fully prepared and ready to completely have like a sequence where you don't get a full win, right? So and by the way, for me, a full win is just whenever I hit my target and or enough money on a winner to cover my previous couple of days of losses. Okay. Most of the time when I wake up and I hit a big win, usually that win has already hit the target. Um, if the trade has not closed on its own by 12 p.m. Eastern, which is the London close, go ahead and close the trade yourself. So manually, you're welcome to close it if you happen to have a trade still open. So right here is this is my bust calculator over here. I put this together to kind of give myself a hypothetical of how bad things could get. This is a worst case scenario calculator. So it's kind of like a stress test, if you will, of my account if things were to just absolutely go the wrong way. So this is basically a hypothetical saying you start a sequence, you have 6 days to win, and every day you hit a loss both directions. Okay. So you basically start with 100 grand in the account. This is a hypothetical here. The first night you lose both directions. It's a total of $500 of losses. Now your account balance is 99,500. The next night you lose again both directions. After the $380 loss in each direction, your account balance is now 98,740. And then it just continues along. And this is assuming that every single day was a complete loss. Just a whipsaw in both directions, no wins whatsoever, not even like a day where you just lose one direction and that's it. Like last night, we just lost one direction, not both. This is both directions for 6 nights in a row. So, very, very worst case scenario. This loss could be if you look at this number right here, this 10,580. So this is what I could lose on 100 grand if I went the full 6 days with no wins is $10,580. So it's nearing 11% loss. So that is possible. If you look at that number and you're like, holy smokes, what am I doing? Okay. This is what I want. I want you guys to see this, like, so that you can be like prepared now and determine whether or not this is worth your time. Because for some people, they might look at that and be like, yep, that's not me. I'm not doing anything. And that's good. I mean, it's good. I mean, that's why I want to display this in front of you so that you're aware of what could happen. Okay. And then you may want to adopt a 1.25 multiplier instead of the 1.5 or so on. Okay. So this is, by the way, this is a loss, assuming that you're using the 1.5 multiplier, which is what I think most people are using. That's what I'm using right now is the 1.5. Um, yeah. Okay. So now this is a worst case scenario. You're probably, if we're thinking real life terms, you're probably not going to lose 6 days in a row at the full, loss both directions. You're probably going to be about split. So you're going to have like, if you do hit all 6 days in a row of losses, you're probably going to have half of them lose one direction, the other half will lose both directions, and it'll probably be scattered when those happen. So, my guess is the loss on this is going to be a lot closer to like 6% to 8% of your account, not 11. So 6 to 8% is, I think, what you should expect to lose if you were to hit a full bust scenario. But I just want you to be aware of that. Okay. All right. So there's other ways you can make this lower if you want. For me, I'm not gonna, for me, this is perfect. Like an 11% loss is actually max is actually perfect for me because I also want to keep the leverage up so that when I win, I'm also making a lot. Because if you look at these numbers, guys, so it has made since May 1st. If you had just followed this sequence all the way through, there were no bust sequences, and it's up. Let me delete this right here. Currently, it's up $27,749. Okay. Let me show you if it had hit bust. There was actually one day in the sequence. The worst sequence I ever had with this was on May 24th. I did get to the 6th day of the sequence, finally got a win. Now, look what happens here, guys. Look, what if that day was a loss instead? Let's say we had not won on May 24th and we had gone the full sequence without a win. Look at the numbers. So I'm going to type in -6 instead of 30. Okay, so here's where you would be actually today. So you'd actually still be up $16,000 after almost 3 months of trading. And that's with a full sequence loss mixed in between. Okay. But it does take away, I mean, it probably took what, like 11 grand, 10 or 11 grand of the profits here. Because what happens is if you hit bust, you just go back to your default contract size and you start over again. Okay, so you start from scratch, basically. Um, Again, it hasn't happened to me, but I fully expect it to happen at some point. And when it happens, it's not going to be fun, but I just want you guys to be totally prepared and ready to know that that is a possibility. Um, okay, so any questions about the sequence multiplier, how this works? Let me just look at some of these comments and then we'll move along here. Um, um, Let's see. Lee says, I built a tab in my Excel tracker to calculate that. I put the high and the low values of the Sydney box, and it calculates the stop loss price and the take profit price. It also gives you the pips in the stop loss used with the position size calculator. Oh, that's amazing. Nice job. See, Staten says, how wide do you leave the box left to right until the next session? That's a great question. So let's back over to this. How wide do I make this? So it doesn't really matter how wide um, the box is left to right, so long as you just start the box at the beginning of the session to the end of the session. You don't need to move this box all the way over here. You can just leave it like this. I like to bring my projections out so that they end at the end of or at the beginning of this next Sydney session. So it's just a habit I have. I like to move these out this way to about here. But it's more for me to view it's just so that I can see my numbers. That's all that's for. But yeah, it's a great question. Um, Paul says winning mornings are like Christmas when I was a little kid. Yes. Well, yeah, because like if you have, like you said, or like we were talking about, if you have three or four accounts and they all win, and and each account makes 3 or 4 grand in each one, yeah, it is kind of a invincible type feeling. I know what you're talking about. Stan says in the rectangle box settings, you can select the middle line checkbox, then you can use that line for the stop loss on both trades. Oh, very cool. Nice. Oh, Wes says he uses that too. That's awesome. See, Lee says, since I'm using this in a prop firm, I'm starting with a much lower initial risk, 0.05. This gives me a couple extra days before I hit what I consider max risk. But should I automatically cut it off at 6 days? I use the 1.5 multiplier, but the lower starting point. I see. Okay, yeah. So you could use a lower starting point. Um, yeah, you could absolutely use a lower starting point. That would buy you some more days if you wanted, because what I do is I stop at 2%. So anything over 2% risk on a trade, I won't do. And so I only get 4 days on the 2x multiplier, 6 days on the 1.5, and up to 10 days on the 1.25 multiplier before you'd get over 2% risk. But if you had a lower starting point, you could do that. I think it is good to have a healthy starting point. That's why I like the 0.25. I like that because there are some days where you will win on the first day. And so you want to make sure that your first day is a decent win. Like you want to make some money on that first day. Sometimes we even have days where you win multiple days in a row. Like this period. Remember that period at the end of June? We had like 3 or 4 days in a row of just won every single day. Doesn't happen all that often, but that's why you want to have some amount of money made on those days to make it worth it. But yeah, there's a lot of different ways you could go about it. Okay. Paul says I've found Trading in the Zone really helpful in developing traders mindset. Good book. Yep. Awesome. Okay, great, guys. Let me show you how to do this for Tokyo. So a lot of people have asked me, how do I trade this? Because Steve, this is very hard for me to trade at night. It's kind of late. So here's a couple of other ways you can do this. This is not the only currency pair that breaks out at this time. Obviously, you can trade the euro dollar, you can trade the pound dollar, but there's other things you could trade. Like you can trade the Tokyo Open. So I'm going to switch this to the New York session. And I'm going to go to the dollar yen. Okay. So dollar yen is probably the best currency pair, in my opinion, to trade during the Tokyo session. Um, and this has its own breakout as well. So it not every day, just like the euro's not going to break out perfectly, but some days, the Japanese yen will move pretty significantly. This is a little more convenient for a lot of folks in the United States. The Tokyo Open is at 8 p.m. Eastern. So mark that down on a sticky note if you don't already know that. 8 p.m. Eastern is when the Tokyo market opens. That's at 5 p.m. Pacific, 6 Mountain, and 7 Central. And that is every night, Sunday until Thursday night. So you have 5 nights a week. You could potentially trade the Tokyo market. It is open for 8 hours. Like I said, the dollar yen is probably your best currency pair. So what I've been doing, I've been back testing this and I'm still back testing this. So I don't have a lot of data for you, but here's the idea with this one. Um, I've been drawing out the previous 5 hours of like so what I've been doing is I've been taking the Tokyo here. Let's actually do this. Let me go show you how to do this. So if I mark um, the Tokyo session and the New York session right here, which you can't really see. Let me change this to a black background so you guys can see this better. There we go. So red is your New York and yellow is your Tokyo. Okay. And so what I've been doing is before Tokyo opens, I've been going back 5 hours. Okay. So if Tokyo opens right here at 0 GMT essentially. Okay. I go back 5 hours to 1900 GMT, and then I basically make that my box. So it's basically the latter hours of the New York session, and I make that my box each day. So that's what I've been doing. The reason why I've been doing this is because if you use this New York session as your box, if you use this just like I'm going to use this instead. The problem is your box is huge. Okay. Some days your box is going to be way, 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 way too big to make some kind of a breakout. Okay. So you're trying to get a breakout of basically the consolidation of the end of New York and part of Sydney, and then use that for your Tokyo breakout instead. So this is what I've been doing. I've just been doing the last 5 hours. So I go like this at 0 GMT, and then I just go back 5 hours. So about 1900 hours is what I've been doing. GMT time, and this is all just defaulted on your um, this is all just on your trading view done for you. And then that would be my box that I would use. And then it's just the same process. You just basically put in a sell position at the bottom of the box, halfway through, which it looks like um, this box is about 42 pips. So about 21 would be 21 pips would be my stop loss, and then you would ride that down 1 to 5 if you could get it, obviously. Yesterday looks like this worked, but didn't quite go the full 1 to 5. Right. And then it looks like it also triggered this one would have, this is not a great day, but looks like it did trigger the buy right here barely. And then that one would have lost, but you can see the process at least, right? You're drawing these up. So you're just taking the last 5 hours. This is the way I've determined to do it is, and you guys can do it a lot of different ways, but I've just determined to take the last 5 hours before Tokyo opens and use that as your box and as a reference going forward. So let me do another one with you guys. So I'm going to go ahead and remove that. And let's do, this is Friday, I believe. Actually, you wouldn't do Friday because Friday, um, no, you could actually, no, you could do this because, um, no, wait, you couldn't do this one because this is the New York session. No, you couldn't do this one right here because this would be Friday going into Sunday. So this one would be a no. But you could do this one from yesterday. Could use this one from yesterday. This is the weekend, so you wouldn't use that one. But this one you could use. So this is the end of New York. Let's see, starting right here. Yep. So this is your Tokyo box, or I guess not Tokyo box. This is your New York box. Essentially, you're going 5 hours before, like that, and then you would draw your box out. Looks like that would pretty much be it. And then it's just the same thing. This one would have whipped both ways. I can already see it whip both directions. Would have triggered the buy and then the sell. So again, your win rate. This is not going to be like, oh man, this works. Like you're winning 50% of the time here with Tokyo instead. You're still going to have plenty of days where it just doesn't work out the way you'd hope it would. Let's see. This one would have been a lot better right here. So this is actually a really good day. This was on Tuesday last week, going into Wednesday night. Yeah. So this is a good one. So you have here's the beginning of Tokyo. Here is 5 hours before, like that. Your box is pretty dang small, but it would have worked. Um, your buy stop would have triggered long. Your stop loss would have been about halfway through that. It would have hit, unfortunately, but that's okay. And then it looks like your sell would have been perfect, actually. It would have triggered right there just nicely. And then let me get that stop loss put in. And then a 1 to 5. Actually, you should have gone so much on that one. But yeah, you would have just done a 1 to 5 pretty easily. So um, there you go. That's basically the concept right there. Let me see. Here's another one. This one looks like it would have worked out. You wouldn't have made as much, but you would have worked here. So here's the end of Tokyo, or here's the beginning of Tokyo, 5 hours before Tokyo. So you're basically like if you're doing this at 8 p.m. Eastern. Okay, so let's say you come home from work, you want to trade this at night, and you want to do a Tokyo session one instead. Basically at 8 p.m. Eastern, or just like maybe 5 minutes before 8 p.m. Eastern, you'd go in and set an alarm. You'd set this up. You would basically draw out from a vertical line from the current time, and you'd go back 5 hours and draw another vertical line, is what you're doing. And so 5 hours before that would be like 3 p.m. Eastern. Okay. And then that puts you about right here. And then you just draw your box out like this. Okay. And then you would do a buy stop above that, stop loss about halfway through, which would put you about, yeah, about there. And then you could ride this up and then hold on to it through this one wouldn't have hit the full, you would have won on this one. You would have made some money on this one, but you wouldn't have made the full 1 to 5. So it just like how that the same thing happens with us during the London session. Same thing, the overnight trades, same thing happens. Um, so what do you do with this one? I would just hold this one while you sleep, and then when you wake up, do the same thing. So you could do this more as a Tokyo session breakout instead. I will say one thing that I think is important. So this works. You can definitely do this. You can follow a sequence easily doing this. It might be a better time for you to do this. Here's one of the issues that I perceive um, becoming a problem is let's say you start a sequence with the Tokyo session instead of the overnight trades, and let's say you want to trade it all. You want to trade Tokyo. You want to trade the New York. A lot of the times the markets break out in unison. So this happens in stocks, it happens in Forex, it happens in crypto. When markets, like for example, cryptos are starting to come up big time again, right? But it's Bitcoin came up. What else came up? Well, Ethereum came up too. You saw like other cryptos come up as well. And so they all come up together. And so if you are trying to trade the Tokyo session and you need capital, let's say you use all your leverage or most of your leverage for the Tokyo trade, then you may not have leverage available to trade the overnight trade. So, in my opinion, it's better to pick one that fits you best and then just trade the one that fits you best rather than trying to trade it all. Okay. Let me show you how to do this during the New York session. Let's say you'd rather get up and you're more of a morning person. A good currency pair to do this would be euro dollar is not bad. Another good thing is like if you have the ability on a prop firm account to trade NAS 100 or US 30, these are really good. Let's actually do US 30. So on US 30, what I think is really good is the same exact thing. Basically, I'm going to pull up the New York session on the sessions indicator. Instead, let's just do New York only and we're just looking for a breakout during New York. And what I'm going to do is I'm going to go back the last 5 hours, okay, before the New York market opens. Okay, and we're going to do the same thing. So yesterday, kind of a whipsaw of a day. The markets were kind of crazy today. They didn't do anything. Well, they didn't crazy when I mean crazy, they didn't do anything. So, okay, so this is at 12 a.m. Um, GMT. Um, or not 12 a.m. This is just 12 GMT. Okay, so 5 hours before that would put you at um that would be 7, right? So you have 7 right here, would be 5 hours before. Okay, so this would be your box right here for today if you're going to trade US 30, right? Then if you were to do that, and then you go through the same process, it looks like it would have whipped both ways that day. Right here would be the box for Friday. Looks like this would have been perfect actually, or almost perfect. Here's your box. You go 5 hours before, so about right there, and then you draw your box. Um, and you go ahead and draw your box out, and then now you've got an option. There you go. So basically, you take the same trade, but now you're. This looks like actually a decent breakout. Looks like it may have worked. Um, it may have worked out or it may have not. Let's see. Might have whipped you out there. I'm not totally sure though. Um, but this is the idea at least. Okay, and that's almost that gives you a 1 to 5 right there on US 30. And then here's another day right here. Another day. This one probably again, you're gonna have a lot of days where it whips both ways just because it has a low win rate but high return, right? So here's your box right here for the Tokyo or not Tokyo, but for the New York. Okay, so you go 5 hours before, and then you would just put your breakout both directions. Again, that day looks like it would have whipped both ways. Okay, here's a good one. There you go. So again, that's all you're waiting for. You're just basically waiting for one solid win a week. That's all you need to make this work. So here's the beginning of New York, and then here is um, there you go. So here's your box. Here's 5 hours, right? Okay, this one's perfect, actually. Beautiful. Yeah, looks like it wouldn't have even triggered the sell, which is good. You would have placed your sell there, and that would have been a no trade. Um, and then it looks like your buy would have triggered perfectly on this day right there. And then your stop loss would have been about halfway through. And then your target would have been a 1 to 5. You would have hit that by the end of the trading day. That is perfect. That's awesome. So there you go. So and then oh yeah, that looks like there might have been a win right here. Potential. Oh yeah, that would have been a win the previous day before that. Looks like a whipsaw day here. Potentially a win right here. If there was a win, it would have been small here, probably a whipsaw. This looks like it would have been a win on this day. So yeah, you can go back and do that, but I like the idea of doing a box that's 5 hours before. This is the same for the New York session and the same for the Tokyo. So if you want to do this, again, just keep in mind that you may need the capital because if you're trying to do an overnight trade and New York Open and a Tokyo, you're trying to do this 3 times a day, you may have a capital issue by not having enough leverage if your capital's already tied up in like the euro or if it's already tied up in the yen, right? So I think it's better to, in my opinion, pick the one that you like the most and then go for that. We will talk more about this in other calls. Um, so like we will um, um, like this is not the last you're going to hear from this. This is in fact the first time we're introducing this. So be patient with this, but feel free to give this a shot and plot this out on a few charts. Feel free to do some back testing. But this should give each one of you 3 different times a day that you could trade the breakout strategy using the sequence calculator and anything, um, um, using the sequence calculator on any session that you want. And then what that would do is allow you to trade a session that matches your lifestyle. So great. Well, anyway, I'm going to go ahead and wrap up with that. Um, and I'll let you guys, if you guys have questions, feel free to hit me up with an email or anything. We can talk again tomorrow, I'm sure. And we do have several webinars this week where we can talk more about it. All right, guys. Well, have a fantastic rest of your day. Thank you for coming, and we'll see you guys in the next call.